Hey guys, welcome back to another Rich Dad Poor Dad blog where I read to you one of these fantastic blogs they got on their site. Now, they have multiple blogs, I think, written daily. I like to post at least one of these once a week to help keep you guys up to date what's going on. And just it's always great to learn new things. And now this article is on the financial statement, your foundation for being rich. So yeah, great thing. Everyone needs to know what their financial statement is. The key to financial success is understanding your personal financial statement, which a lot of people don't really understand or know. So, yes, this is a great article for you who have never seen or written down what your financial statement is. So, here we go. What does it mean to be rich? This is perhaps the most important question you can ask and answer. For most people, being rich means making a lot of money. Think that if they can just make a little more each month, all their problems will be fixed. They'll live like kings and queens. But financial literacy begins by understanding your personal financial statement. The reality is that money doesn't make you rich. What does make you rich is your financial IQ. Give the same $100,000 to a person with a low financial IQ and a person with a high financial IQ, and I guarantee you'll see a vast difference in how that money is spent and grown. Central to the difference between those with low and high financial IQs is a simple but profound literacy, the ability to understand a financial statement. One of the most important things you need in order to be financially successful is to know how to read an income statement and balance sheet. But even more important is understanding the relationship between them. You can see that in the Rich Dad Personal Financial Statement, which you can download right here. So there's a file right there. But many people who take accounting classes learn how to read an income statement and a balance sheet separately. I've always found it fascinating, however, that these classes don't teach why one document is important to the other or how they affect each other. My rich dad felt that the relationship between the two was critical. How can you understand one without the other? How can you tell what an asset or a liability really is without the income column or the expense column? He asked. For Rich Dad, understanding the relationship between the two allowed you to easily see the direction of your cash flow to easily determine if something was making you money or not. If something was making money, it was an asset. If not, it was a liability. Just because something is listed under the asset column does not make it an asset, said the Rich Dad. The reason people suffer financially is that they purchase liabilities and list them under the asset column. It's not about what you make, the income, but how much you keep, the expenses. For most, the idea of high income is a good thing. For the rich, it is a bad. For most people, the idea of low expenses is a good thing. For the rich, again, it is bad. In fact, it's only the financially unintelligent who think that making a lot of money in the form of earned income is a good thing. These are usually high paid employees like C suite holders. They may seem rich, but they think like the poor. As the rich dad said, money is just an idea. Once you understand the idea that low income and high expenses are good, you will understand one of the most pivotal realities of the idea called money. Not understanding this fundamental concept is why many rich people go broke. Now, how money really works. Also, I've studied the idea of money throughout my life. I discovered the 90/10 rule. 90% of people earn 10% of the money in the world. How do they do this? By positioning their income and expenses properly. These, of course, are the same 10% that Ocasio Cortez thinks she can increase taxes on and fund her political plans. If you do not understand money or how it works, it will seem like a strange statement that the ultra rich position themselves to have low income and high expenses. You may be asking the question, how can low income and high expenses make you rich? The answer is found in the sophisticated investor utilizes the tax and corporate laws to bring those expenses back into the income column of their financial statement. So that's how it works. Now, I always remember KISS. Keep it super simple. One of my rich dad's greatest skills was take complex things and make them super simple. It was one of his rules for investing in KISS. Keep it super simple. He had a way of taking complicated financial subjects and making them easy enough for even a 9-year-old boy to understand. I know this because when I was 9, Rich Dad used to follow simple diagrams to teach me the relationship between the income statement and the balance sheet. I still use them to this day by completing my personal financial statement. If you can understand the following diagram, you have a better chance of acquiring great wealth. Now, the cash flow patterns. An asset is something that puts money in your pocket. A liability, on the other hand, is something that takes money out of your pocket. It's that simple. Rich Dad pointed out that confusion happens for many because accepted methods of accounting allow for the listing of both assets and liabilities under the asset column. To explain this, here is the diagram he drew. Simple. So the balance sheet, assets, $100,000 house, liability, $80,000 mortgage. This is why things get confusing. Rich Dad would say, in this diagram, we have a $100,000 house where someone has put $20,000 cash down and now has an $80,000 mortgage. How do you know if this house is an asset or a liability? Is the house an asset just because it's listed under the asset column? The asset is, of course, no. In order to know for sure, you would need to refer to the income statements and see if it was an asset or a liability. The financial statement of a rich person, for example, this is a diagram of what a sophisticated investor is working to do. So let me zoom out a little bit. So you have your income statement and your balance sheet. So the assets will throw your money into your income. Liabilities will be taking it out and be mostly thrown into expenses. All right. So when you start to understand what is happening in this diagram, you will begin to see a world of greater and greater financial abundance. Essentially, what this diagram shows is that the rich use their income to purchase assets and expenses that then create more income for them in the form of cash flow. The reason for this is that the income these assets create is not earned income, but rather passive income, the lowest taxed income. Additionally, these assets can be kept in entities that provide substantial tax benefits. In short, though they may be very rich, they do not have high income like a high-paid employee will. Rich Dad said, one of the most important controls you can have is found in this question. What percentage of the money going out of your expense column winds up back in your income column in the same month? By understanding the side of the coin that the Rich Dad was speaking from, I saw a completely different world that most people who work hard, earn a lot of money, and keep their expenses down never see. I could see a world of ever-increasing wealth rather than one of a diminishing returns. Now, the financial statement of a middle-class person compared to the above diagram with that of the traditional way of thinking, what about the idea of money? All right, let's zoom out on this one so we can see it. So you got income sheet goes out. Let's see, liabilities. Okay, so we start with the income. It goes into liabilities, which then goes into expenses. So that's where it is. So the rich in the other diagram, theirs went from income to assets, which basically puts more money back into their income. But the traditional common person in the middle class will go from their income to some form of a liability that's not making any money, and now they got to pay on it. So yeah, that's a very super simple diagram right there. Now, this is the financial diagram of most of the world's population. In other words, the money comes in through the income column and goes out the expense column. It never comes back. That is why so many people try to create a budget to live below their means, to save money, be frugal, and cut back on expenses. This is why most people will say, my house is an asset, even though the money goes out the expense column and does not return. At least not immediately. It also explains why people say I'm losing money each month, but the government gives me a tax break to lose money, rather than saying I'm making money on my investment and the government gives me a tax break to make money. Now, why your house is a liability. The illustration, to illustrate that your house is a liability, Rich Dad drew this diagram. You got the income, and now you got your expenses. So there's mortgage payment, real estate taxes, insurance, utilities, maintenance. That's a lot of expenses to have a house. So, and then when you go back to your balance sheet, assets, liabilities, your house ain't really an asset if it's got all these expenses tied to it. Now, how your house is the bank's asset. Rich Dad then added to the diagram a line that read rental income and net rental income, the key word being net. The addition to the financial statement changed that house from a liability to an asset. So here we go. Rental house, where was that? Rental income. Yep. So now it's in the income. So now from their house, they're gaining income that can pay for these expenses. So yeah, so that's how the rich would do it, or the banks own it. But very simple, Rich Dad explained if the rental income of the house minus the expenses of the house equaled positive net rental income, the house is an asset. If not, it is a liability. Now, your personal financial statement simplified. These simple lessons are profound and they are the basis for building all great wealth, going back to my earlier comment. A person with a high financial IQ and $100,000 would be able to know how to invest it in an asset that are true assets, one that put money back into the pocket each month. The person with a low financial IQ would spend the same money on liabilities, but wouldn't be able to diagnose what was wrong. Instead, they would try and work harder to make more money, a vicious cycle that we call the rat race. Now, if you don't you want a better life for you and your family? Yep, take that quiz. But understanding the relationship between this income statement and the balance sheet, as seen with our personal financial statement template, allows you to quickly understand if an investment is an asset or a liability. And this understanding will allow you to make the right investment every time. Today, ask yourself the same question. What percentage of your wealth goes from expense column back to your income column in the same month? If you can understand how this is done, you too will find a world of ever increasing wealth. If you can't see this, find someone you trust and discuss how it might be possible. You can start by talking about a post I wrote earlier in this year, 4 tips on budgeting to become rich. So yeah, great blog right there. Shows how financial statements work. This is basically what it is. You have an income, you have your expenses, and then you can list your assets and liabilities. And then, yeah, so like the rich, they buy assets that will go back into the income, while a traditional person will buy a liability, which will be possibly a brand new car. Now you got insurance, you got maintenance to keep out on it. It's an expense. It's not putting money. Maybe going, well, no, it drives me to work. Well, if you were having to stop working, that is a big liability to hold on to. Rather, a person who puts it into a house, rents it out, it pays for the expenses, and puts a little bit more income, maybe 25 bucks, maybe 100, depending on what it is. But that's how the rich do it. So this was a great thing to understand your financial balance sheets, having financial literacy and IQ. Now, this is what I did to learn to get where I was, like with my crypto business startup, how I started learning, like I started following the Rich Dad Poor Dad, because these are great lessons that need to be learned and they're not taught in school. Your school will never teach you about this. They want to keep you in the rat race, work a job, make money, pay your taxes. Well, you could find a whole new world outside of that. So yeah, that's why I bring you these daily or these weekly Rich Dad Poor Dad blogs, because I want to help all you guys out there and have financial success in your future as well. So I hope you guys like this article. If so, smash that thumbs up button, subscribe to my channel so you don't miss a beat, and check out my Patreon where you can find these much more organized than the YouTube channel. So thank you guys for watching. Until next time, the Crypto Sherpa is out.